Alright guys, so I thought it was about time I teach y'all like how I'm doing this because I'm getting a lot of questions on social media, on Facebook and stuff. And by a lot I mean, a couple dozen, not famous or anything. But I'm getting enough questions where I felt like it's time to start maybe educating people a little bit on how I'm doing this stuff. So like I'm not blindly just gambling here. There's a reason that crypto is moving, and I will show you what that reason is really simple and really quick. So this is the total circulation of money in the US, right? Like this is the M2 money supply. So how much money, you know, sorry, I was reading the text. This is how much money is being printed monthly. Okay. So we're printing more money now monthly than ever before. And we saw that stop in 2022 because rates went up and we turned to quantitative tightening to get inflation under control. Came all the way down here. And then we have since started printing again, and now we are in a period of quantitative easing. Simultaneously, we have an administration changeover to a pro-business, pro-asset management, pro-crypto administration. Like, all of the policy should result in less regulations in this current administration. And we have seasonality, right? We have September is historically the low point of the year every year, especially in election cycles. So, but November and December are almost always the best months historically and seasonally. So it's an accumulation of understanding the larger macroeconomic scene, right? And I know this graph isn't exactly overwhelming, but what you have to understand is that we just stopped quantitative tightening and we're going to go back to printing again. And you can see that literally since the 60s, the supply of money has done nothing but shoot up. But now in 2021, we saw this huge push, right? Which was because of COVID and all the money that came into the economy in the form of stimulus and stuff, which is why we saw such bad inflation so fast, right there. That's why that happened. Anybody that wants to say anything else, shut the fuck up, because that is why. That is why. Like, we put more money into the economy in that little short period of time than we did like the decade before that. Like, okay, so from 2020 to 2015, we put in roughly, we were averaging 11 billion a month in 2015, and we were averaging 15 billion a month by 2020. By the beginning of 2021, we did the same amount. So in a 4-year span, we did the same amount in a 1-year span, right? Like, of course that's going to cause a spike in prices because now money is like that much more available. I mean, they were giving out like $1,000 a week in unemployment. They were literally just shoveling money out, which is going to make it worth less, okay? Well, so with that in mind, right, let's look at something else. So right when that happened, we're looking February of 2020 to April of 2021, and that was a period of quantitative easing, okay? So let's go look at crypto. Let's look at Bitcoin specifically, and let's go back and let's look at that same period of time. So we're looking for February of 2020, right? So there's February of 2020 to April of 2021. You notice anything? What happened? Right when we switched from quantitative easing back to tightening, what happened to high risk assets? Like, notice how this correlates almost perfectly with this. That's not like a coincidence. There's a reason for that. There's more money to come into crypto when we're printing money, right? Like, that's They correlate exactly, and it makes sense because money is easier to get and worth less, so the price of things that are not necessarily like super needed in your life go up, right? Like high risk assets, high risk, people have more money to risk, so the price of those go up. This is always true. You look at any stock that's risky, anything like that, like it's people are willing to take more risk when money is easier to get. It's just simple psychology and economics, okay? So that's the first reason that I know what's going on with money right now. And I've been like, I was able to call this in September of this year, which you can see. This chart's really like poor. It's just so small. I can't really show you on that. But like September. So the halving happened here, which we can talk about crypto halving or Bitcoin halving later in a different video maybe. But September we got this nasty crash in July, or in September, sorry, in Bitcoin because of the Japanese yen and stuff. But our Fed at the same time was communicating to us that they were thinking about, or they were projecting that we were going to start cutting rates. And inflation was almost down to under 3%. It was like 2.9, 3.1. Based on that trend and what they were saying, and when I saw this crash, that was an opportunity because I understand how all this correlates, right? So that's why I did that. Sorry, I got distracted for a second. So, and since then, we've started cutting rates, and we've had pro-crypto. So, all right, so the market started trending up with rate cuts slowly. Then we got the pro-crypto president. Boom, huge explosion, right? This stuff all correlates, and we're still practicing quantitative easing, but this initiated like the influx of money that's going to start coming in, right? So we have more money going into the economy to be spent, and simultaneously we have demand rising in crypto because people are seeing like fear of missing out, right? Like it's the people down here that will win ultimately. You can make money along the way, but the ones who were smart and understood this back here are the ones that are like, they're already up. Let's see, this is Bitcoin specifically. They're up 500%. And they were getting Bitcoin for $16,000 back there in 2022. And these cycles, like they repeat, and they're going to continue to repeat because we have a national debt that is completely out of control. Like, we have to keep printing money, and we have to keep printing more money because the interest on our debt just keeps killing us, right? That's another reason they need to bring rates down, because our debt is murdering us, right? We're paying like 5.75% on that $35 trillion of debt or whatever. It's obnoxious, but until that changes, which there's no forecast of that anytime soon from what you're seeing in government. This will continue, right? So once you understand that, you can start looking at some other things, right? So here is the Bitcoin price performance since the lows, the cycle lows, meaning the bottoms of each cycle, right? So the yellow one was the first ever cycle. That was 08 to 11 basically, and that one was a little like, you can see the data is incomplete here. So I say ignore that for my example here, but look at every other one. So the red one is 2011, 2015, blue one is 2015, 2018, green is 18 to 22, and then black is 22 to 25 is what it's going to be. Or 22 to 26, technically. But so, I want you to notice something. Like, they don't correlate as far as where they are on a chart, but the movement of them is identical at periods of time. Like, they all trend up to here, and then they go higher from there to here, and then they go higher from there to here, and then they start to fall off, right? Except with the exception of, you notice that the cycles kind of keep getting later too, it seems like. But the point is, like, the timing doesn't really matter, but the trend of them is consistent. Like, every time it does the same thing. And you could argue that you're seeing diminishing results here. Like green is lower than blue, blue is lower than red, and red is lower than yellow, and each one of those is like further in the future, right? So the black one probably won't even get as high as the green one. But regardless, you can see from where we're at now, right, historically, we're going to move higher. So, I mean, what the heck? All right, well, don't click on the chart, people. That broke it. But anyways, so that directly, well, I really broke this, didn't I? That directly correlates with what I was showing you with the M2 supply as well. And then you look at the seasonality, and you can, it really gets crazy. Like, this is how I called ETH and how I've done so good on ETH, because taking everything I just told you guys into account and coupling it with this. So Bitcoin's best quarterly returns in every cycle happen in Q4 or Q1. But Ethereum's best returns are always right behind Bitcoin's, which means altcoins will... What happens is Bitcoin gets to like 60% dominance, a bunch of people come in to the crypto market, and a bunch of money comes into the crypto market, and then the people that have Bitcoin start selling it and moving their money into the altcoins, and then those prices get pumped. It's a rotation is what it's called. And I'll show you in a second how I knew that was starting, but I just want to show you. So like each cycle, so we go 2016, 2017. You look, 2016 would be the equivalent of 2024, okay? And 2017 would be 2025. 2020, the cycle was early because of COVID. Bitcoin did 168% in December, and then 5% in 2021. 103% in Q1 of 2021. So this and then this. So in two quarters, it did 268%. Well, actually, that's not even true. It did 168% from where it was at there, and then it did another 103% from the top of this. So it's more like 500, 600, 700%. I don't even know what that math would work out to be. A lot. A lot. But look, and then 24, we're not done with the quarter yet. We still have the whole month of December. I expect this to be in the hundreds of percents by the end of December based on these trends. But we'll see, right? But then notice, right? So 2017 Q4, we saw 215% in Bitcoin, right? And then Q1 of 2017, or sorry, did I fuck that up? Yeah, sorry, I'm looking at the wrong. That year's, it's missing. Why is it missing there? That's strange. I don't know what's going on with that part. Yeah, alright, so let's just look at a different example. Alright, so 2020, right? We saw the huge move from Bitcoin, and then the next quarter, we saw almost the same move from Ethereum. I mean, can we go back? Am I looking at something wrong here? Yeah, oh yeah, I'm looking at the wrong year. Okay. So, that can't be right. This chart can't be right. 2017. Oh yeah, the cycle was in the end of, okay. I forgot. In 17 it ended in like late November. The timing was a little different. Point is, it like, alright, so we saw 215% here, and then Ethereum followed, right? And then in 2017 we saw this is just a weird, that was like the ETH cycle, I guess, you know? So maybe we just discredit this one. But let's look at more recent data. So 2020, we saw December, like Q4 of 2020, it was Bitcoin, and then Q1 of 2021 was altcoins. Okay, so again, like we are not seeing Ethereum outperform Bitcoin yet, right? So that rotation hasn't happened yet, right? So this chart's just not super great at relaying what I'm trying to say. But basically, why I know that Ethereum and some of these like altcoins are about to take off is because Bitcoin's percentage of market cap is taking a sharp downturn right now, which we did break 100,000 here last night, which was pretty cool, but it wicked right back down, which I figured it would, right? You know, everything's kind of moving with it, waking up. Doesn't mean it's time yet, but here's how you know. All right, so this is the Bitcoin dominance. This is what percentage of the crypto market Bitcoin makes up. Okay? Historically, again, we're using historic data with trends to make assumptions on what is most probable to happen, right? Historically, right? Bitcoin's dominance has done nothing but go down. And that makes sense because the more people understand the crypto cycles, the more crypto coins there are, the bigger the non-Bitcoin market gets, the less dominant it's going to be. But so look, we went from 90% to a peak of 70%, and then this cycle we're projecting that 60% will probably be the peak for Bitcoin because of that diminishing pattern, right? And we might get back up here. I'm not saying that we're not going to get back up here. Probably not, to be honest, but we might. But the point here is, look how long it trended. All right, so like to get from where it's at now, it took from July to November, and it gave all that back in like a couple of days, right? So, but the price didn't drop. That's not what that means. Like, as you can see, the price is still up. That's the percentage of money in the crypto space in Bitcoin. We see a dramatic change, right? That means that a ton of money came into crypto. The price of Bitcoin didn't change, but somehow the dominance is still falling. That means that money is flowing into other coins, right? Quite significantly and quite rapidly. Like, that's what that shows you. So I caught this. It broke this uptrend, right? And that's how I knew that this was starting as well in the last couple of days when I've been posting these things on Facebook and stuff for you guys, is because like this happened, and this is the biggest telltale signal that we're about to see it. My expectation, we're going to see it like right around here, and then boom, right around here, boom. It's going to keep falling like a knife, right? And you can see when it does fall, man, does it fall. Well, let's look how this correlates. So May 21st or May 19th of 2021, right? So the dominance was down to 40%, but I'll bet you that was probably the all-time high during that cycle. There you go. It was just before that, right? But you can see what I'm saying. Like, they inversely trend. The dominance of the market does not control the price of Bitcoin, but it shows you that more money is coming into other crypto. That's what that shows you. So you can use that to make assumptions about where things will go. So when Bitcoin's dominance fell in that period of time, I'll bet you anything that Ethereum, that was its best part of the cycle. Here you go. See, I showed you Bitcoin peaked in April and its dominance fell from April to May. Look what Ethereum did in that same period of time, because the money literally rotated out of Bitcoin into altcoins. But the smart people started doing that down here, right? They started averaging out of Bitcoin and accumulating down here so that they could flip it again. And then they did the same thing again with meme coins and NFTs and all that stuff. And so if you understand how the phases of crypto work, with the M2 supply, with the macro image, you can literally, like, accurately, using historic data, percentage change, and statistics, like being able to calculate the probability of something, and then you can correlate all that together, and you can make crazy accurate predictions. It is honestly kind of mind-blowing how good you can do it. I want you to understand something too. Like, it looks like we're crazy high right here, but this, let's see, this was March of 24, so that would be the equivalent of March of 2020. We should probably look at this 17 cycle because that's more closely aligned. Yeah. So these little divots right here are the equivalent of these, right? And then look how much higher we went from there. See what I'm like? We're gonna go way up here, right? And I can show you, like I've got other videos showing you how high I think it's gonna go, and I use all this data that I'm showing you guys to project that. There's risk in this stuff. You can lose your ass doing this, right? But that's what risk management is for. You learn how to set stop losses. You learn how to pay attention to the macro image in the macroeconomic situation, global economy, politics, all this stuff. You learn how it all works together and how it correlates, and you just keep yourself informed. Just like every day, spend an hour getting yourself in touch with what's going on with all these things that I'm talking about, and you can stay aware. Like, you can be ahead of the curve with this stuff. It's crazy powerful, and I know I'm giving you guys a lot of information here, and if you want to know about specific topics, tell me, and I'll focus more on that specific thing. But yeah, it's honestly crazy. Let me just show you. Like, I haven't really proven this. I mean, I have, but I'll give you more proof of the M2 and liquidity tie. Look at this. This is honestly insane. See if I can find a good image. Here we go. All right. So, I mean, if I could drag this line and put it over top of this, it trends right with it. It lags it though. You see that? So it's about, that's February. This is December. It's about 3 to 6 months behind it. So we saw, not always, I guess, sometimes it's pretty spot on. But the point is, notice how they move together, right? Like, it's not a one-to-one, but they move together. They trend together, right? It's because the more liquidity there is, the more money can come into high-risk assets. That's it. Oh, sorry, I have these backwards. This is your liquidity, and this is Bitcoin. Sorry about that. Notice how they move together, like they correlate. It's pretty mind-blowing just to see how closely they align. So yeah, I explained why that is earlier, but I just wanted to show you guys one more piece of evidence that that's true. I wish I could like lay these over each other so you could see it, but it wasn't as relevant back here, right? Because this was like the inception of Bitcoin. But just look since that initial craze, right? Oh, it hit $1,000. What's this thing? Everybody starts seeing it, Every time there was liquidity coming into the market, people started investing in it more and more and more. It's pretty staggering. But yeah, so that said, we're expecting $20 trillion of liquidity from here till the end of this easing cycle. So that puts this blue line at about 90K, roughly, which we're at 70,000 now, so that's 30-ish%, 30 to 40-ish%. So if we saw the same type of move out of Bitcoin, you're talking about $140,000 Bitcoin. It's not the sole thing that drives it. There's other factors, right? Like the price can get overpumped at certain periods, yada yada yada. But that's a pretty healthy target based on this data. Pretty astonishing. So, anyways, hopefully some of what I've showed you here was helpful. If you start to get a good image on those things, and I told you what to look at So from here, you go and Google those things and start to learn about those things, and I'll try to teach you some of it too. Um, but once you understand how that all ties together, like, you see the opportunities. You just do. Because you see the market crash, but you know that the underlying fundamentals didn't fall apart, well, then that's an opportunity, right? Like, unless the fundamental theory of your positioning and the theory of your investment fails, you shouldn't lose conviction in it. Otherwise, you probably shouldn't be putting money in it, right? Like, you're investing in it because you believe it's going to do something. So, leave you with that. And, yeah, have a good one.